Hi everyone, so welcome to Investing with Values. Today I want to talk about two IPOs, and one of them is Snowflake and the other is Jfrog. So you've probably heard of Snowflake because none other than the Warren Buffett is investing into this one. So that kind of puts it on everyone's radar. So that also makes it kind of very pricey because firstly you got an IPO type premium, you got a tech premium, and now you have the Warren Buffett premium. So getting this at a good price might be very, very difficult. So we'll have to see what the pricing is when it does actually come onto the market. But for the IPO pricing, it went from $75 to $85 per share for the IPO pricing, and now it's $100 to $110 per share when it comes onto the market, which is, quite a jump. And why is that? Because all of a sudden there's this big hype around the stock because Warren Buffett's buying into this. So everyone kind of sees this future of this company being in the long term very, very good and reliable because, well, you'd probably think Berkshire Hathaway vetted through this company, and also Salesforce. So Salesforce has done really well itself, and if it's kind of buying into this company, those signals are very, very good, when it comes to this company. And yeah, well, we look at this, though, it's kind of valuing this company at about 28 billion in valuation. So we look at the numbers, the growth rate is extreme, 121% in quarter two, and it's based on the year past year. So that's really great. And I've got 3,117 customers, and that's also growing really well because back in 2015 they had 80 customers. So to go from 80 customers to over 3,000 in 5 years, that's pretty good. Mind you, they are decent sized customers. So customer sizing, it just, like we could look at 3,000 customers and you'll be like, oh, 3,000 doesn't seem like a big figure. But in the scheme of things, these are big figures. And about 56 of their customers earns them over $1 million in revenue. So that's pretty good. And here's the really impressive part where their quarterly growth is through the roof, right? From quarter three in 2019 for that financial year to quarter two for the 2021 financial year. It's gone from 29 million to 133 million. So we look at this growth and it's extraordinary, right? So that's the thing. When we look at this, we kind of feel like, yeah, it is extremely good. But is it a 20, kind of like the valuation wise, how much would this be worth? So I did do my valuations, and the top figure I came out with was about 28 billion, which is kind of what they upped the new IPO pricing to. So when I'm looking at the upside of this company, I don't really see that much more upside in this current value. If you're buying into it for the long run, maybe you can get some upside. If it's even at $120 per share, I guess it's still doable for a long-term hold. Unless you're just playing the hold for a week and you hope the hype just sends the stock even higher, then potentially that's the case. Though I'd have to highlight weakness about this company, that it is a company that relies heavily on Amazon and Microsoft to do their setup, and guess who's their biggest competitor? It is Amazon and Microsoft. So it's kind of really weird because your biggest competitor is also your biggest supplier in terms of this system you use. So that's a very big weakness that I'd highlight with this company. But if Amazon and Microsoft don't do anything about it, they don't all of a sudden up the pricing, then I think this company should be fine. I guess it's a good signal when Warren Buffett's investing in this company that he thinks it's a very stable company, doesn't think Amazon or Microsoft might change things about it. So I guess overall this company seems alright, though I just have to highlight that as a weakness when it comes to this company. And they were losing 178 million which was quite a decent amount, right? But that's down from 348 million. So we'll go and have a closer look at the financials. So these two parts are the 12-month figures, and then these are the last 6-month figures for each respective year. So 2019, they went from 96 million in revenue to 264 million revenue in 2020, which is really impressive. But the thing I have to highlight is that they are spending a lot on marketing. So their sales and marketing expense is actually more than the revenue itself, which is kind of bizarre, but I guess since they're growing so quick, they have to acquire customers just as quick, right? So when I look at this, it kind of sends the wrong signal that your marketing, sales and marketing is 125 million, your revenue is 96 million, and the same with the 2020, your sales and marketing is 293 million, and your revenue is 264 million. And in the same thing here, 137 million in expense for sales and marketing, and the revenue is 104 million. Though recently it's changed, which is a very, very, very good sign, that their sales and marketing was 190 million and the revenue was 241 for the past 6 months for January the 31st. So when we look at these numbers, I do see a very nice picture being painted because of, just the turnaround in terms of expenses versus revenues. The revenues are starting to gain ground, and also their margins are increasing as well. So those are really positive signs that at the start this company was growing. They're spending a lot more trying to grow than they were bringing in, but now they're starting to show signs where the money they're bringing in is starting to cover their expenses, and hopefully in a not too distant future they'll be profiting. Though we just have to highlight these loss figures that they are still fairly decent, 177 million, and then increasing to 347 million, and then in the past 6 months, in 2019 it was 176 and 170. So in terms of losses, they have decreased it to some extent, but it's still relatively high. But it's not a problem since they've got a decent amount of cash. And at the end of July, they had 886 million, though they're raising over 2 billion, so you'd expect about 3 billion in the bank account by the time they're listed onto the market. So if they have 3 billion and their burn rate's about 300 million a year, that's really not a problem. So I don't think the loss is a problem. The big focus would just be the growth rate. So more or less, if they're coming onto the market at about a 28 billion valuation, and you're probably looking at about 480 million in revenue, or maybe even 500 given the momentum. Yeah, like I think the valuation's probably on a higher point of fair value. I think it still has some room it could go up, but not a lot of room. So that's the thing. This is being priced so much for success, though at the same time this is a company that has really proven that they are performing consistently, as we saw with that quarterly chart, not just around here, that this is showing extremely good consistency. So yeah, like that's in terms of valuation. Yeah, like if you get $100, I'd say it's a good deal. But I don't feel like you should ever pay more than 120, at least not currently. Unless you're really planning to hold for the next few years, then maybe you paying a premium might be okay, in case the price drops or the company doesn't perform as well. then you'd be holding for a long run. Or yeah, but at the end of the day, like, it is quite a premium in terms of what you're paying for this company. And then for Jfrog, you're looking at a company with 5,800 customers. Again, it just depends on how much these customers pay you. The impressive part is 75% of the Fortune 100 uses this company, so I'm really impressed about that. If you look at the website, you can see who their customers are. It's Google, Workday, Atlassian, Amazon, Facebook. You know, these are extremely large companies, and they all trust this company. So that's one thing that I'm more impressed about Jfrog than I am with Snowflake. So if I'm looking at a company to invest in, if I could get Jfrog at a better valuation, I'd probably prefer Jfrog, even though it's not growing as quick. It's growing 50% year on year, whereas you had basically Snowflake growing at about 121%. So there's quite a bit of difference in terms of growth. But I think Jfrog offers more of a secure base, given how established its clients are. And yeah, like, we can look at this company as basically, if you don't know what Jfrog does, it's basically, if you're a programmer and say like you're working at home, which is what's basically happening in this current environment. So Jfrog will be a system that thrives around this kind of atmosphere, where people share code to basically create their programs, and it puts it all together. It's great for developers, you know. You need a system like this where it puts everything together. And it's, in a sense, fairly essential. Whereas for Snowflake, I think they're good at what they do. They're ahead of their competition in some aspects. So that's the thing. They're ahead in some aspects, but their competitors could easily just come up with a new product and start competing with them very strongly. Though if the growth rate is showing that what they're doing is extremely good, but at the end of the day, their acquisition cost is very high, so we have sort of to consider that. Their revenue has to grow much quicker in the future. In a sense, same speed. You don't want it to dip like to 50% or something like that from 121%. So we'll have to see how things go with this company. But I am impressed with the growth rate. It shows a lot of things are working. They are signing a lot of customers, so we'll just have to see. In terms of Jfrog's revenues, it's 56 million for 2018, 94 for 2019, and in 2019, past 6 months, they've been growing around. So like from 2018 to 2019, they grew at about 80%. And in the 6 months to June to 30th, they went from 41 to 63, which is about 53%, which is still pretty good, but you can kind of see that there's kind of a diminishing rate of return when it comes to the growth. But in terms of like, they still have this license revenue as well, which I haven't included, but more or less it's still kind of around that 50% mark. And I guess same with this, it's in a sense still with that 50% growth. And in terms of cost of revenue, their margins are extremely good. So but in terms of like total cost of revenue, so 13 million over 63. So yeah, their margins are really good. And unlike Snowflake, their sales and marketing is still very proportional. It's about a half to a third, which is what you want to see. So hopefully Snowflake can rein in their sales and marketing to about a half or a third in the future, and that should translate very nicely to the bottom line. But that's the thing with software. Uh, it's just one of those things, like you have really good margins, but you need people using your product, so you need traction, you need to make people aware of it, you need to sell it. But the one impressive thing is the loss was 426,000 for the 6 months in 2020, leading up to June the 30th. And yeah, like if we look at that loss, this company is on the cusp of making a profit, which is what you really want to see, right? In 2018, 26 million loss. 2019, 5 million loss. 2020, we're looking at probably less than 1 million in losses. And in 2021, you can imagine they're going to be making a few million, which bodes really well with the projections going forward, and also their growth rate. It means these guys don't really have to grow as quick to make a big impact to their profits in the future. So that's kind of what's going for them in the future. And the valuation of this company is looking about 3.3 billion. So 3.3 billion is on the higher end of the fair value valuation. But if you ask me which I prefer, I'd say I prefer Jfrog over Snowflake, just because of how much stronger it is than Snowflake. Whereas Snowflake's competing against two juggernauts, Jfrog is in a sense being used by all these large companies. It has the market wrapped up, and it's so unique in a way for what it does, because there is other platforms, but no other platform puts all these products together for developers that it's as useful as them. So like you can have competitors, but I think majority, like it shows when they're able to sign up 75% of your Fortune 100 companies, that this company is by far the best one in what they do. But I can't say the same thing about Snowflake. But Snowflake happens to be in a category that is growing like crazy. So like the thing is, if you're in a category that's growing like crazy, then you just keep signing up customers. Same with Amazon and Microsoft. Their cloud systems are doing extremely good. So I think it's just about a preference. I think both companies will do extremely well. The question is, what valuation do you have to pay to actually buy into these stocks? With Snowflake, it could be quite a high valuation. But we'll have to see when it opens. And same thing with Jfrog. The valuation is a little higher than I would probably want it to be for me to be buying into this. But hey, I think given the current market where tech is in high demand, interest rates are low, there's a lot of people wanting to find a good investment. And yeah, I think these are the companies that are offering some really good opportunities. I think, yeah, like long term, you do really well for them. Short term, I think you're paying quite a high premium for them in the short term, but in the long term, I guess it pays off. So yeah, that's kind of my thoughts around these two companies. Let me know what your thoughts are. Until then, good luck investing, everyone.